Welcome to Enjoy the Journey podcast, where we interview expert entrepreneurs and thought leaders to help guide you in pursuit of financial freedom. Presented to you by Jackson Milan, the Wealth Mentor, where we help service-based business owners remove cash flow bottlenecks, maximize their profits, and turn business profits into personal wealth. G'day guys, this is Jackson Milan, the Wealth Mentor, and we're here for another episode of the Enjoy the Journey podcast. And I've got a good friend of mine from across the pond, Justin Krane from Krane Financial Solutions, who's going to be talking to us today around all things finance and wealth for business owners. Justin has a wealth of experience in this space, excuse the pun, and we're really looking to unpack some of his genius today to help you guys just build a better business, have a better understanding of your numbers, but also make sure that you're using your business as a vehicle towards creating financial freedom for you and your family. And this is why Justin and I get along so well, because we definitely sing out of the same songbook. So, Justin, thanks for joining us, mate. How's things with you?
Man, I'm stoked to be here. Thank you for having me. Two financial people on one podcast. Let's get wild and go crazy.
Exactly right, mate. What could go wrong?
Right.
So, Justin, for those of you who don't know you, tell us a little bit about you and what you do.
Well, I had tuna fish sandwich today for lunch. I'm taking a vitamin C and a vitamin D. I ran 4 miles, averaging 8.5 minutes a mile today. Tonight, I'm going to watch the Lakers play in an NBA playoff game. I'm a CFP, a certified financial planner professional, and I'm also a fractional CFO for a few clients in the business space. And I act as their primary financial advisor. And when I'm not doing that, I'm probably meditating, taking a nap, drinking wine or coffee.
Love that, mate. Fantastic. So, Justin, how did you get involved in this finance space? What's your origin story?
My origin story is that I collected baseball cards and comic books. I was the kid that collected those and had this fat wad of cash from trading cards and comic books and investing. And then I got into just the stock market and stocks and stuff like that. Interned for a company called Dean Witter back in the day in the late, let's say early 90s. And then got out of school. I called this one brokerage firm, it's called P.S Whenever. And the manager answered the phone. He's like, come on in for an interview. I'm like, when? He's like, now. And I was like, oh boy. That was so big on me because, when you're in college, nothing fits you. You just look like a complete schlep. And I went in there and he hired me and I was like, oh, geez. And I had no idea what I was going to experience or expect, but I haven't looked back since.
Amazing, mate. Fantastic. Now, let's talk about some of the common traps and issues that business owners find themselves when it comes to wealth. So, Justin, in my experience working with a lot of business owners, we kind of see that business owners kind of talk about this idea of reinvesting back into their business. And I've commonly found that this is often an excuse for poor cash flow management because very few
Yeah.
business owners are really investing back into growth. They're normally
Mhm.
reinvesting back into covering cash flow. What's been your experience when you look at financials for small to medium businesses?
Okay. Well, I'm going to just go complete diarrhea of the mouth. I'm just going to do it.
Go for
Number
it.
one, they're guessing. They have no clue what's going on. Number two, they're abdicating by relying on the bookkeeper or the CPA to tell them what's going on. And they can't really make intelligent decisions if they don't know what's going on with the numbers in their business. Number three, I'm going to declare today is a holiday for your listeners. It's called National Get Your Head Out of the Sand Day. If you don't have clarity, you're going to continue to guess. And money is about intention. It's about what you focus on. It's the direction that you take with your financial life. Here's the deal. If someone gets into business to make pies and the next thing they know, they're doing 250 grand, $500,000, $1 million, 5 million, they have a new problem. It's called managing cash and managing cash flow. So you have this mental conversation, I'm not going to deal with it. I'm going to stick my head in the sand. But because you've done well, you have this new problem of managing cash. So how do you do it? And what's the best way to do it? And I'm sure we'll go into that today, but
Well, look,
it's guessing.
yeah, you're talking my language, Justin, because I think that you're right. Most business owners abdicate this responsibility because they go, hey, I'm just good at making pies, or I'm good at running a
Yeah.
fitness business, or I'm good at running whatever it is that you do. My
Yeah.
accountant, that's their job. But in my experience, I've
Yeah.
found that most CPAs, they speak a different language. They don't talk business owner speak. And they often make it far more complicated than what business owners need it to be. And it becomes this vicious cycle, right? It just kind of perpetuates
Yes.
itself.
Yes. Yeah. So CPAs they're looking at what happened. They're not looking at what's going to happen. And the CPA's main job is to potentially save their clients money in taxes, but that's not really the end game.
No.
I want more CPAs to be financial advisors, not like you and I, but to really have their clients' interests best in mind. And probably the biggest thing that I do with my clients with money and cash flow and CPAs is working with the CPA to make estimated tax payments for the future and not just relying on what happened last year, because everyone's business changes. You're either making
Exactly.
more money or making less. So if you're making more, you got to pay more in estimated taxes or make it up with withholding on salary. But the CPAs are too busy looking at what happened. They're not looking at what will happen. So in comes Captain Obvious, Mr. Proactive. And I'm like, what's going on? Well, I sent you the return. I sent you the tax return last year and the estimates were there. Well, that was old news.
100%. And look, I've even
Yeah.
been caught with this myself, Justin, that I remember my first business, very naive. I thought I'd done the right thing and got an accountant. And then all of a sudden I'd lodge my financial statements and tax returns. And they go, oh, surprise, Jackson, here's a $50,000 tax bill. You've got 30 days to pay it. Good luck.
Yeah.
And I'm like,
Yeah.
oh, shit, why didn't you tell me this 12 months ago so
Yeah.
I could have prepared? And
Yeah.
I'm sure you see that far too often, right?
Yes. So here's a tip that business owners need to do is you need to ask the CPA, what percent of my sales do I need to set aside and put it in a separate business savings account? Now there's the profit first people and pay yourself first and all that, and that's cool. But just a simple metric of what percent of sales should you set aside to pay taxes? And a CPA who's smart can tell you that number.
So the next part then comes around people's fear of tax. Most people are working, they don't want to pay tax, Justin, I found in my experience, particularly business owners, because either they've been conditioned by their CPA to say, hey, only pay yourself a little bit of income.
Yeah.
We're going to
Yeah. Yeah.
save as much tax as we possibly can. But do you feel that tax savings and wealth creation go hand in hand?
I have no problem with a client paying lots of taxes. I have no problem with that because they're making money. There's nothing
Exactly.
wrong with that. That's number one. Number two, let me just say that this is generic. This is generic advice. I'm not telling anyone to do this, but I'm just throwing the concept out. Total hypothetical. In the US, we have IRAs, we have Roth IRAs. We have 401ks, we have Roth 401ks. With the Roths, you pay the tax now, it grows, and you don't have to pay it later. There's lots of catches to that. But if you pay the tax now, then your taxes are going to go up now. But maybe that's a smart idea. I'm not saying everyone should do it. Again, I'm not saying that. Whoever's listening, consult your own independent advisor. But what if it makes sense to convert to a Roth IRA? What if it makes sense to pay taxes now? CPAs don't care about that. I'm a little concerned that the US, with COVID, we just printed like $8 trillion.
Yeah.
Like, who's going to pay for that? You think they're going to cut Social Security and take it to like age 12? No, they're going to push it out to like age 91. And where are tax rates going to go? They got to go up. That's my own opinion.
I
Again, I
agree.
have no clue what I'm talking about at all. It's a complete guess, but who knows?
I agree with you, mate. And so many people are so caught up in saving tax that they completely forget about this wealth creation thing. So when it comes to being a business owner and you working with your clients, what are the ways that we should be considering going about building wealth as a business owner? Because I feel that many business
Okay.
owners believe that they're going to go to this
Yeah.
big
Yeah.
payday, they're going to sell their business, and they're
Yeah.
going to sail off into
Yeah.
the sunset.
Yeah. I actually didn't answer your question because you asked me that before and I went
That's
on
all right.
some other tangent about tax and wealth. But here's the deal. The first thing I think for a business owner in terms of wealth building is the business model. How does the business owner make money? What do they have to do to make money? I'm going to give two examples. I don't want to knock realtors. I mean, I have clients that are realtors. But if you're a realtor, you're only getting paid when the escrow closes and you're getting paid one time. That's not a great business model. It just isn't. You get paid one time and then you're done. You got to find the next thing.
Yep.
So, what if you're a consultant and you have a client that just pays you on retainer for just like $1,000 a month forever? That's a better business model. But the challenge with that business model is, that you're trading time for money and maybe you got to hire a junior consultant and all of that. But a business model, in my opinion, is how hard do you have to work to make money? And for product people, they can make money when they sleep because they're selling products. For service people, they don't have to deal with inventory and managing cash flow because they're just doing stuff and getting paid for it. So each product and service based business owner has challenges. The key is, I know everyone knows about scaling. So I'll just say you've got to try and scale it. If you don't know what scaling means, it means investing some money and getting a big return. And then if you invest just a little bit more and get a huge return, you get a little bit more bang for your buck. If you guys didn't get that, just be like, how do I scale my business? The bottom line is you want to grow your business. The business model is the first thing, period, end of story. You have to have a business model that's good. If it's not, that doesn't have high profits, recurring revenue, good margins, all of that, you're not going to build wealth. Sorry.
Exactly. And you can't guess that stuff. This comes back to the previous point that there's so many
Yeah.
business owners where guessing gets them so far, but then they wonder why their business turns into a cash eating monster is because their business model has changed or their cost structure has changed. They haven't recognized that and they haven't adapted accordingly. So I think
Yeah.
that's a really good point.
Yeah.
This ties in so well. So let's assume that we've got somebody who has a great business model. They've got profit, they've got good cash flow. What do we do next?
Okay, so step one was the business model. Step two is automation. Why do we automate? What does automate mean? It means automatically moving money from one account to the next account. Yeah, I know that's very simple. Like everyone listening, you already know this. I'm not some like guru that like thought of, oh, automatically invest money. The automatic millionaire has written that, David Bach. It's so simple, yet how many people are actually automating their money? So what happens when you automate money? You are disciplined, you don't get lazy, you don't forget, and you invest. You automatically invest money that grows and compounds, which can build wealth. I mean, like the thing is let's say that business owner is they don't even know how much they can afford to take out of the business, what the cash of the business needs, what their personal expenses are, how much they have to set aside for taxes. So what they do is they guess, they go with some number, it's too high, and they're like, I'm done. So don't guess, find someone that can help you, take that number, and then let's just say it's 5 grand. You could automatically take $5,000 from your business into your personal account and invest it. That's how you build wealth. Another
Beautiful.
way, number three, is you can sell your business. You can actually sell it. So the next question is, would someone want to buy it? Like, can you sell your business or are you your business? And like, if you're not there, like it's not worth anything. I would just Google, how do I increase the value of my business? How do I make my business more saleable? How do I, get a good multiple of sales or profits or whatever? And I'm not going to go into the weeds on that, but
Yep.
that's an important way to build wealth.
100%. Yeah. Look, I think there's so many business owners, even businesses that are cash flow businesses, like, for example, a realtor who's just getting paid on a transaction. There's no value there. But there's
Yeah.
ways that they could potentially turn that client base into, say, a rent roll or into some other type
Yeah.
of asset or build a proprietary
Yeah.
system that they could sell that is value. So I think that's really important.
Absolutely. And then the fourth thing, I mean, it's an obvious is you have to have a profitable business, which gets back to the business model. Like a very hard business model is like the restaurant business. It's
Yeah.
just so tough. The
Yeah.
margins are so thin.
Yeah.
But maybe a better business model would be one where the margins are higher, where you can just make more money. I go back to consulting.
Yeah.
But really, it's the business. Everyone listening, you got to know like when $1 comes in, how much do I make in profits? And that's like what everyone loves. But I'm also interested in cash. Like, how much cash do you actually keep?
Yeah.
Cash is very weird, and people say cash flow and all of that. And well, can I be podcast host for a minute,
Please go for
Jackson?
it.
When people are talking about profits with you, or cash flow with you, what do you make of that? How do you teach people to distinguish between the two so that they actually understand what the problem is?
Yeah, well, the way that we distinguish the difference is that we talk about one in accounting speak that keeps the taxman happy, and one in terms of what's actually physically in the bank account. And as a
Yeah,
business owner, it's what is in the bank account that matters.
yeah,
And I think so many people get confused to try and run their business on the reports that their accountants give them. They typically
yeah.
only look at the profit and loss. They don't have any understanding of the balance sheet, which means they don't have any understanding of cash flow in it from an accounting sense. So let's leave that to the guys in the navy blue suits and the white shirts, and they can keep the tax man happy. And let's just talk about bank balance accounting of how we run our business.
I love it. Yeah. I mean, I use the statement of cash flows. I don't know if they have that where you are,
Yep.
and the clients love it because they're like, I'm like, your account balance on January 1st was $100,000. On May 5th, it's 42 grand.
Good.
Let me show you where that money went. And they're like,
Yeah.
oh my God, this is awesome. And the thing is with this is if you can find someone that's good, you can actually have a glass of wine or two glasses of wine and have someone like tell you this. So it's
Exactly.
not all on you. That's one of the big ways to create wealth is hire trusted advisors that are good, that can make you feel safe, not judged, in control, and feeling like you're moving forward and you're going to progress and make money and all that.
Beautiful. Makes perfect sense, mate. And I think, yeah, people like yourself are a rare breed because so many of these financial folks just talk in ones and zeros, and
Yeah.
clients just glaze over and they feel
Yeah.
stupid and they feel insecure. and they don't have peace of mind, and they nod, but then they leave and they go, "What the hell was that guy or girl talking about?" And that's not
Exactly.
that's not what we want. So, Justin, the common question is going to be now, well, okay, great. We've got the business model right. We understand our cash flow. We're automating that surplus. So we're putting, say, that 5K into an investment account. We're focusing on maximizing the business value so we can one day sell it if possible. What do we invest in? And when it comes to creating an investment portfolio, and I understand this is not advice, we're just talking in general terms, hypothetical
Yeah.
terms. Where do we put the money? Do we invest in shares? Do we invest in property? Do we stock pick? Do we choose managed funds? What goes into constructing an
Okay.
investment strategy for a client?
So I have to be very careful with this. Like I'm a I'm an SEC registered investment advisor. The
Yep.
regulations are insane. So anything I talk about, I have to give like massive disclaimers. I would just say for people when it comes to investing, diversify. You have to diversify and you can't have all of your eggs in one basket. If you're doing one of those things that you mentioned, chances are you're probably taking too much risk than you need to take. I believe that you just have to diversify, and that answer basically says you can do all of that, but you can't have all of your eggs in one basket. And there's one other point that I want to make, which is the biggest, like, of course, but wealth creation takes time. You don't create wealth overnight. The 5 grand example, whatever you invest in, here's the kicker, here's the key word: compounding of interest. If you guys take anything from what Jackson and I are talking about, you have to compound your money to become wealthy. You can't leave the money in the bank and have it not grow because it's not going to keep pace with inflation.
Yeah.
You have to compound your money. So what does that mean? Let's say you've got $100,000 and you make 10%. That's 10 grand. Now you're at 110,000. 10% on 110,000 is 11,000. Now you have 121, so on and so forth. So how do you compound your money? What of those things should you put your money in? It depends on the client and the client's financial situation. But in order to compound, your time horizon has to increase. You've got to have a long time horizon. The longer the time horizon, the higher the odds that your money will compound.
Beautiful. I love that. Fantastic. And I think most businesses don't understand the idea of compounding, but I guess this is about strategies that often happen quickly, where business is quick, it's happening fast, it's always evolving. And I think many entrepreneurs can get impatient with wealth because it takes a long
Yes.
time.
Yes.
So it's about having a clear North Star. And the common question that we hear is, well, Jackson, how much do I actually need to be able to achieve financial freedom? How does one go about calculating that number,
Oh
Justin?
my God. I love that you asked that question because I do that all the time. And it gets back to my first answer, which is you can't guess. You literally can't guess. Okay, I'm going to answer it. But for everyone listening, don't bail on me. Like, stick with me. And my abbreviated answer is let the financial advisor figure it out. But here are the inputs that go into how much money do I have to put away. So, and I'm going to give an example. Let's say that you're going to go to the movies and the movie starts at 7:30. Well, what time do you need to get there? Maybe let's say 7 o'clock. Okay. Well, how long does it take you to get to the movie theater? Is anyone seeing a movie anyway anymore? But 15 minutes. All right. You got to leave at 6:45. All right. How long does it take you to get ready? 15 minutes. All right. You got to get out of the shower at 6:30. That's it. So, what are the inputs to your question? How old are you going to be when you want to have the option to slow down? How much money are you going to make when you want to slow down? Nothing, cold turkey, retire, or work part time. How much money are you going to spend in the future to live? How much will you need? Forget about inflation. What's your monthly nut now? Is it 10,000 bucks? Is it going to be the same? So let's say, so what is it? How old do you want to be when you have the option that you want to retire on your terms? Are you going to be working part-time? How much money are you going to be spending? You have to put a rate of inflation on there. You have to put a rate of return on the money that you invest. And then there's other, like, a few odds and ends. You can have real estate that comes in. You're going to get Social Security. There are going to be other pension benefits. Do you have other goals? You might have a second goal that's more important than retirement, like charity, buying a second house or whatever. But it's just all of those data points. No one can do this on their own. I can't even. I have to put it all into a software program and then look at scenarios.
Yeah, and I think this is the importance of making sure that you get the right advice. And Justin, there's multiple ways in the US that you can get advice. There's fiduciaries like yourself, who's a certified financial planner. You're registered with the SEC, but there's also brokers, there's money
Yeah.
managers, there's wealth coaches or money coaches. So, what are the various options that are available to people when it comes to getting this financial advice to work out what they need to do to achieve their goals? And I guess
Mhm.
what are the pros and cons of choosing one over the other?
I think, they're all good in their own aspects. So the fiduciary legally has to put your interests first. What the client pays the advisor is written out. It's not paid from a third party. It's on an agreement, and then the client pays the advisor directly. There's no commissions involved. It's very on the up and up, and that's it. The suitability way in the US means the financial advisor can recommend suitable investments to the client and can get paid a commission and can put his or her interest ahead of the client. I know many financial advisors that work that way. They're not, they work more on commission. They can say they're fee based, but still they can sell an insurance product or an annuity or a mortgage or a mutual fund and get paid a commission. I don't have a problem with people working that way. It just needs to be disclosed to the client. And there's way more transparency on the fiduciary side. And then when the term financial advisor, like, well, what is that? Is that someone that sells insurance? Is that someone who manages money? Is that someone that does financial planning? If you're a money manager, are you also a CFP? Are you a financial advisor? Is a square a rectangle or is a rectangle a square? I mean, like I could go on and on. The bottom line is the client should ask the advisor, what do you do? And if the advisor can't tell the client what they do and how they get paid, there's too much confusion and the client's going to bail and go somewhere else.
Makes a lot of sense. Cool. So let's say we've got somebody who's listening who is interested in getting some additional help. What are the things that they should be looking for in a good advisor? What are some of the questions that they should be asking?
I'm a little bit more opinionated on this one than just the general stuff I've been giving. I actually think that there's not that many questions they should ask. In fact, they don't even have to ask any questions. It's all about the presentation of the advisor and the advisor's process in getting to know the client. Is the advisor talking about him or her that they manage $4 billion and have been in business since 18? And the client, what are the questions that they ask you? What's their process in getting to know you? How do they set up the meeting before you even get on Zoom or make a phone call? What's their process? And do you feel like they're interested in you or just your money?
Makes a lot of sense, mate. Yeah, I think that speaks volumes for how you're going to work with somebody after you sign on board. So I think that's really great. Awesome, mate. Well, for you, you shared so much value, Justin. So who's an ideal client for you? Who would you be looking to connect with?
Well, first of all, I wrote this book called Money, You Got This. And just Google it or go onto Amazon. It's a great book and it's really good for business owners. It's like Seinfeld meets Curb Your Enthusiasm meets today's podcast, like Money. It's really cool. And half of the stories in there are about weird, crazy, funny stories I've had in life and how I apply a money lesson to them. And I'm saying that because my book can help everyone who's listening. But the clients that I work with, they're generally doing 1 million in sales. They have investable assets of around $500,000 and they're in their, I don't know, mid 40s, something like that. But that doesn't mean that I can't help someone. The book, I think I wrote it for everyone.
Fantastic. And if somebody's listening to this and they want to get in touch with you, Justin, how would they do so?
LinkedIn, they can go to my website, they can email me. I'm sure you'll put all that in
Yeah.
the show notes. But if someone wants to just find me on LinkedIn, they can type in Justin, like Justin, Krane, Krane. If you want, I can give them a URL to just get a gift where they'll eventually get to me. And that's just intentionmoney.com.
We'll include that in the show notes, mate. So, as our parting point, what would be the last piece of advice that you give to our listeners?
More of the same equals more of the same. If you want to improve in something, you've got to do something different because what got you here won't get you there. And I'm telling that to myself because I need to hear that.
Beautiful, mate. Great advice. Look, you've shared so much value, mate. This is great.
Thank you.
I think there needs to be more financial advisors like you, and looking forward to sharing this with our audience. So, guys, if there's anything we've spoken about today that resonates with you, please reach out to Justin. He's more than happy to have a conversation to see how he can assist. Been another episode of the Enjoy the Journey podcast. Thanks again, Justin. Look forward to chatting again soon.
Thanks, Jackson.